Good evening, everyone. Welcome back to the channel. This is going to be our first video on NEOS Boosted ETFs, which are offering between 15 and 23% yields. Phenomenal, right? So we're going to go over the tickers on the website, and we're going to talk a little bit about each one. So if you go to the NEOS website, just for starters, you would navigate over to the ETFs page under Boosted Income, and you'll find XSPI, which is Boosted S&P 500 Income. And then you will find XQQI over here. And that's the boosted NASDAQ 100, and then the XBCI. So let's just go and we'll pull up one of these here. So if you're an income investor, you've obviously heard of NEOS, especially if you watch this channel, right? They disrupted the covered call space in 2024 and 2025 with ETFs like SPYI and QQQI, delivering high tax-efficient yields. But in early 2026, NEOS dropped a bombshell, the Boosted Suite. So we're talking these three that I just mentioned, XSPI, XQQI, and XBCI. These aren't just income funds, they are 1.5x leveraged. So we're seeing leveraged ETFs really take off lately, in the income space as well. So these are income boosting, tax efficient machines designed for a risk on environment. In this video, we're covering everything you need to know, how they achieve 150% notional exposure, the risks involved, the tax advantages, and who should actually own these. If you want to understand if these boosted funds are worth the risk, stay tuned. Now, for starters, what are NEOS boosted ETFs? Again, we just went over the three here, and I'll pull up the performance page as well so we can see that. So this is as of today. This is fund inception was February 2nd, so they're about a month old. Management fee 0.98%, and some other facts that you've got there. So NEOS already had high income funds, obviously. Now they've added a boosted layer. The goal is to provide 1.5 times the notional exposure to the underlying index, like the S&P 500 or Bitcoin, while keeping the high monthly income structure. Unlike some leveraged ETFs that use crazy swaps, NEOS is using a synthetic option strategy, specifically a put-call combo. They buy a call and sell a put with the same strike and expiration. Let me slow that down for you all because that's a lot of info there. The put-call combo involves buying a call and selling a put with the same exact strike and expiration. That's important. It's important to understand what we're invested in, right? So this creates the boost in exposure. It's designed to give you more upside in a bull market, and yes, even higher monthly payouts than their standard funds. All good stuff, right? So the key takeaway, it's not just 1.5x or 1.5 times the yield, it's 1.5 times the portfolio exposure. So that's a pretty big deal. Now we're going to talk about how they work. So let me go over some of the underlying stuff here. Okay, we've got this. Let me just read directly from the website. So the goal of the fund's equity and income strategies is to support monthly distributions at an annualized rate after fees and expenses of 19 to 23%. The fund seeks a high degree of tax efficiency through the use of index options treated as Section 1256 contracts, along with opportunistic tax loss harvesting when available. The fund's exposure of the underlying strategies of QQQI, combined with the boost from the additional long exposure to the NASDAQ 100 and the additional income through a NDX covered call strategy, is designed to create approximately 150% of notional portfolio exposure to QQQI. The investment objective seeks to boost performance by generating high monthly income in a tax-efficient manner, so on and so forth. Now let's break down the mechanics. So these are active ETFs. Layer one, they hold the actual stocks or spot Bitcoin ETPs, for example, XBCI. Let's go into that one real quick. That's over here. XBCI is going to be over here. For those of you tuning in, please smash that like button. Greatly helps the algorithm. I'm trying to bring you all better content after all. So for XBCI, they're holding spot Bitcoin ETPs, not the actual stock, because this is obviously different, right? Bitcoin. For layer two, they're selling out of the money calls to generate income, just like SPYI and QQQI. Layer three is what we call the boost. They use a synthetic option strategy to gain that 1.5x or 150% exposure. So this is really cool, folks. This means that if the S&P 500 goes up 10%, in theory, XSPI is trying to give you closer to a 15% return. However, And this is a big however. If the market goes down 10%, you're looking at roughly 15% down, very similar to how any leveraged fund works. The income is high. We're talking potential for 15 to 18% annualized in XSPI and even higher in XQQQI and XBCI, obviously being indexed for the NASDAQ and for Bitcoin. Now let's get into the tax advantage and the structure. So we're going to talk about return of capital. We've already talked a little bit about Section 1256 and the 60/40 tax rule. So why pick NEOS over, say, just a leveraged ProShares ETF? Not just because Coach is talking about it on his video. Tax efficiency is one key point. These funds use Section 1256 index options. If you all haven't followed me for a long time, I've gotten into this in depth with other fund managers I've interviewed. Believe it or not, I used to get all the fund managers on this channel at one point, but now I think they're choosing, I don't know, bigger channels. All right, come on, folks. I got 10 of you on. I need that like button smashed. Let's do it. Let me read some comments here. Sean is first. Bon is on second. I bought a few shares because of the tax implications, not the crypto one. He says, I had enough of these boosted ETFs. While the market is struggling, I own other boosted ETFs and they are struggling. It may change if or when the market goes up again. All right. So we've doubled our like count. That's really good since we've got, after all, hundreds of you on watching. There we go. Those likes are going up. Like I said, really ramping up the content here. Okay, so why pick this? Again, not just because Coach is talking about it, right? But like what did Mr. Bond hint at here? Tax implications, right? So tax efficiency. They use Section 1256 index options. This means that the gains from the option strategy are taxed as 60% long-term capital gains and 40% as short-term, regardless of how long you held it. That's key, regardless of how long you hold it. That means you could hold it for a day, a year, 5 years, half a day. Time horizon doesn't matter. So furthermore, these funds are designed to generate high distributions that often qualify as return of capital, which can delay tax liability. The structure is designed to be very efficient for taxable accounts. And as you all know, I'm not a tax advisor or a tax coach. I'm a financial coach, though. What could possibly go wrong with a strategy like this involving leverage? Well, let's be real. If you're looking at these, you need to understand the risks. The primary risk is, of course, the 1.5x leverage. And me, of all people, I know a lot about risk with leverage. Just ask me about SMCI or MSTR, after all. Then again, last year, the analysts were telling us in the summer that MSTR had a $480 price target. So go figure. All right. So in a volatile sideways market, the boost can actually decay the total return faster than a non-leveraged fund, just like happens in any leveraged fund. Bond says, do you not have any women that follow you that you automatically assume I'm a mister? Well, it's funny. You want to get into my channel analytics now. My audience is like 98% male, which is pretty crazy. I do presume there's some women out there, and there could be some people that periodically identify as women. It is the 21st century after all. But I don't know. Maybe you are. I just assumed you were a mister. It's kind of like, some fields, they say mister regardless. Anyway, okay, well, that dropped the audience number fast. So, but that's key to remember. If the market drops 20% in a month, you could be down 30%. Also, because these are designed for income, you are selling off your upside. If the market shoots up 30% in a year, you won't get all of that upside, even with the 1.5x leverage because of the covered call cap. These are not buy and forget for 20-year investments. These are tactical income tools, just like any leveraged funds. Which one should you choose if you had to narrow it down? So let me do a table comparison here of all three. In fact, let me get away from here real quick. I'll focus back on my handsome face. And let me see if I can do a chart comparison of SXPI. After all, they've been out for a month. XBCI. Okay, just bear with me here for a second. Okay, here we go. So I'm going to share this. So we are going to help narrow it down to which ones we might want to choose here. Okay, so here we go. On this page here, we've got all three, the NEOS Boosted High Income ETFs, all three of them. So let's see. All of them launched early February 2026, and this is what you're looking at in terms of asset class strategy, goal, risk level. There's a table for you all to knock yourselves out on. Okay, so for XSPI, the S&P 500 one, if you want to boost your standard SPYI income and want a bit more equity upside, this would be the balanced choice. XQQQI, if you believe they put a man on the moon. What song is that from? I love it every time I go to trivia and they ask about the moon landing. They subtly play that song. It says, "If you believe they put a man on the moon." It's like kind of, for the conspiracy theorists out there that there are a few that don't think we actually did, they kind of throw that out there. But anyway, so if you believe, and that's where I was going with this, that tech will continue to fly in 2026 and want 15 to 20% yield, then XQQI could be the one for you. And then XBCI, last but not least, Bitcoin. If you want massive income, 20% plus potential, and are bullish on Bitcoin, but want to avoid managing Bitcoin futures directly, this one could be the one for you. Keep in mind, all of these are meant for higher risk tolerance. Let me try to go on a chart here. Let's see what we got at the bottom. Here's some key differences. Let's see. They're all doing the 1.5x. Okay, so let's just leave you on that. Yeah, like we said, larger drawdowns in a bear market. Okay, to summarize, NEOS Boosted ETFs are 1.5x leverage tax efficient high income tools launched in early 2026. They are great for generating cash, but carry significant downside risk if the market crashes. If I were using these, I'd likely use them in a taxable brokerage account for the 1256 tax benefits, like obviously my Fidelity brokerage, and only with a small portion of my portfolio. Let me know in the comments what you all think. Are you going to boost your income with XSPI, or are you staying with the safer non-boosted options? Let me know in the comments, like I said. Now, if you found this breakdown useful, please like and subscribe for more ETF deep dives. And I look forward to seeing you all in the next video. Again, smash that like button, comment away, and subscribe and join Discord. And thank you all so much for tuning in. Again, these funds fees, it's a 0.98% expense ratio, which is not all that bad. I love this last comment here. He says, I need my portfolio to go to the moon. I actually need my portfolio to go like past the solar system at this point. But anyway, again, that's going to do it. Thank you all. Toodles. Ciao, ciao. See you all later. Bye.